Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY22 earnings conference call of Kraft Ltd. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajendra Gandhi, MD of Kraft Ltd. Thank you, and over to you, sir.
Good morning. Good morning, everyone. Thanks for joining this call. I hope your family and friends are all keeping safe, and I pray for their well-being. Today on the call, I am joined by Mr. Rajiv Mehta, our CEO, Mr. Balaji A.S., our CFO, and of course the Orient Capital team, who are our investor relationship advisors. We have uploaded our investor deck and earnings press release on the stock exchanges and on the company's website. I hope everybody had an opportunity to go through them. For the third quarter, we recorded a revenue of 298 crores and an increase of approximately 1%. This happened because Diwali last year was in the middle of November, and as a result, the third quarter of the last year witnessed higher volumes on account of festive season. For this year, majority of the Diwali purchases occurred before the beginning of the third quarter. And as a result, impact of Diwali purchases were extremely limited in the third quarter of this year. During the 9 months FY22, our pressure cooker category had a volume growth of 40% and accounted for about 24% of our revenues. We continue to rapidly grow our AG business, and in the 9 months FY22, we achieved a volume growth of 29%. And this business contributed 7% of our total revenues. Our small appliances business saw a volume growth of 24% and contributed 30% to our total revenues. Our non-stick category has a volume growth of 14%, and this contributed to 17% of our revenues. Our cooktop business, induction cooktop and the gas cooktop category had a volume growth of 65% and 8% respectively. That is the induction cooktop and the gas cooktop. And both the businesses contributed 11% to our revenues respectively. On the cost front, during the current year, the company faced challenges with increase in prices of key raw materials. The company did not pass on the price increase as we expected the price hike in commodities to taper down or reverse. Both gross margins and EBITDA margins saw a decline of 400 basis points and 780 basis points respectively when compared to the last year. The gross margin and EBITDA stood at 94 crores and rupees 22 crores. Having said this, the company has taken a price increase in Q4 as the commodity cost inflation continues. Going forward, your company will ensure that gross margins are back on track by passing on the required price hike in line with the market conditions and further strengthen its backward integration. Now let me also brief you on the 2 acquisitions which were announced for the company. Kraft has acquired the business of Skava Electric Private Limited on a slump sale basis. The promoter of Skava will join the company as a business head to drive this vertical. With this acquisition, the company will enter into the business of manufacturing low voltage switchgear solutions like electrical switches, sockets, distribution boxes, etc. This acquisition will act as a natural extension to our existing product offering of Pigeon LED. Apart from this, the company also has entered into the business of branded modular kitchen segment through acquisition of Smith. Segments represent attractive market opportunities, allow us to offer our digital products to our customers at an attractive price point. We will leverage our strength in both these businesses, that is manufacturing expertise, strong brand recall of Pigeon brand, and pan-India distribution network. Further, we envisage to make additional investments in both these segments to ramp up capacity as well as to automate production lines. We remain focused on increasing our pan-India distribution network, and in the current quarter, we have added 7,200 retail outlets, 4,400 for LED and 2,800 for Pigeon to our network. As on 31st December 2021, we had presence across India through a distribution network of 70,610 retail outlets. This, along with our wide product offering at attractive price points, will enable us to increase company's market share going forward. Now, I would request the moderator to open the floor for question and answers. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prithvi from Unifi Capital. Please go ahead.
Raju, hi. This question is specifically for you. See, given that Diwali, base, etc., it's there for all the companies, not just for Kraft. See, despite that, the volume growth in this quarter, 20-30% decline has been very sharp on Y-on-Y basis. So what explains this? Is it something industry-wide phenomena that you are seeing, because of inflation, etc.? Or is it anything related to Kraft specifically, that has hurt the volumes to this extent? And also, can you throw some light on, how is Q4 progressing?
Yeah, sure. So what has happened particularly is an industry-wide phenomenon for e-commerce. All other brands in our category had closed the e-commerce pipeline. While at the end of Billion Day, which was at the beginning of October, Kraft Pigeon brand as well as the other brands were on a good days of inventory. E-commerce in general, home category had a large amount of inventory for the other brands, as a result of which they did not pick up as much as they anticipated to pick up. So we saw close to a 28% decline compared to last Q3 in e-commerce alone, as a result of which the volumes were down. Other channels, which is particularly modern retail, general trade, institutional, and export, have seen a rise.
So going forward, how do we see, how is the trend in Q4 and, can we expect that 15-20% volume growth that we have been growing over the last few quarters to come back again?
Yeah, so e-commerce is back to normal. All other channels have been growing as we expected, between 15-20%. So I think in Q4 we should expect everything to come back to normal in terms of volume.
So Rajiv, is it fair to expect that our growth rates in Jan and probably the first week of February were back to our conventional growth rates of 20-odd%? Or is it too early to pencil in a recovery?
No, it's back.
And Raju, second on the gross margin front, you mentioned that you took some price hikes this quarter. So, what has been the overall RM inflation in this year and how much is the exact price hike that you took?
See, the RM inflation, the price hike that we have taken across the 2 times that we have done is close to 6%. But the RM inflation has been much higher than 6%. What has helped us is also partly our backward integration. So in a lot of our finished goods, the WIP or for example, we are making our gaskets ourselves, we are making our brake valves ourselves, we are making glass plates ourselves. So partly, while 6% has been the overall price increase over the year, the raw material prices have been much higher. The price increase.
So, given that our price hike is lower than the RM inflation, so what kind of gross margins are we looking at, going forward?
So we are going to go back to anywhere between upwards of 32% in FY23.
So by the end of FY23 or somewhere during the middle?
No, we'll start working on it from the beginning.
Okay. And just one bookkeeping question, Raju. What is the export number in this quarter?
Export is about 16.7 crores.
So that has been quite low, right? Because last couple of quarters, you are growing exports at almost 50-60% Y on Y. 16 crore is almost a 50% decline. So what explains this for export?
The overall scenario for the logistics, because particularly American exports, the logistics is managed by the customer, and they were unable to get the containers. That was the major problem. But their ships were empty, but logistics was a bigger problem. So, but then I can only say that the logistic thing is getting streamlined, and because the order pipeline is there and the capacity is there, so it is getting back to normal. Maybe in the third quarter you will see reasonable growth, but the pipeline for orders is very strong.
And what is the current order book, Mr. Gandhi, for export?
Particularly for the American market, I can say we have an order book which is equal to annual sale. But if this which we believe that the logistic thing is getting streamlined, it's normal. Then we have orders in excess of 70 crores currently for the next 3-4 months, which is normally our annualized sale was in the past.
Thank you, sir. Thanks a lot.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may be requested to rejoin the queue. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, sir, thanks for the opportunity. So we have seen across multiple consumer companies that the growth momentum has slowed down post Diwali. So just wanted to check how was the offtake in the month of December, and even in January, has the situation improved now? Means is the volume uptick on is getting better now? So that is one question. And question 2 is the volume growth that you indicated, is it value weighted volume growth or it's a pure number? Means let's say we have sold 3-liter cooker and 5-liter cooker. So whether we consider it as same or so basically we consider it as two cookers sold as volume, or then we have value weighted that for the MRP the way the other consumer companies do. Yeah, that's it from my side.
In my address, the numbers that I mentioned is by value. And of course, in the presentation, we have also given you the volume growth numbers. Of course, the volume growth numbers for individual unit category, each of these SKUs. So if there is a single 3-liter cooker, then it is a single 3-liter cooker. So we are having growth both in terms of unit numbers and also by value.
Members of the management? So sorry to interrupt. We are experiencing a bit audio break. If you can speak closer to the device, please, a little.
Are we audible now?
Yeah, this is better, sir. Please continue.
So in my address, I mentioned all the numbers that I've mentioned. These are in value terms. And in the presentation that is uploaded on the website, we also have on the page number 7, you can see all volume growth. And to be more specifically answer the question, it is all single units. Each of these numbers are both earlier numbers are also based on single units, and current 3-4 numbers are also based on single units.
Yeah. So that was the precise question. So let's say in case of pressure cooker, so if we sell 3 cooker, we still count as 1 unit, and if we sell a 5-liter cooker, still we count it as 1 unit. So is it correct assumption?
Yes, you are right.
Yeah, okay. But so then volume growth means it might be pretty different picture. So, but yeah, got it. And sir, on the second question, that
Joshi,
demand outlook after Diwali, how it has changed in December, January?
So the fourth quarter is comparatively a lower quarter over the second and third quarter. But because the third quarter of last year, that is the current year, was not in line with the normal year because of the early Diwali, I can say that compared to our AOP, annual operating plan, we see good demand. back in the fourth quarter.
Okay, sir. Thank you.
Thank you. The next question is from the line of Kunal Shah from Carnelian. Please go ahead.
Hi, thank you for the opportunity. I had two parts to the questions. First was more on the side of the margin part, since growth you were saying is back. So I did not get the gross margin number. So wanted to understand whether we can go back to the gross margin that we were having in the range of 35%. And secondly, if I remember correctly, we had already taken a 4-5% price hike in Q2, and now we have taken another price hike, and we have been all the while saying that we work in very close lines with cost plus model. So was just wanting to understand this big deviation in gross margin, for the quarter. How should one read that?
So this, of course, we correct prices based on the input cost. More particularly in this quarter, the third quarter, there has been abnormal price increase in both the input cost, that is the material cost, and the freight cost that we import. Both these have seen some very abnormal price increases, and we base it on the likelihood of the price, trend. And maybe I think we are not covered up for enough of that price increase. But I assure you that we have corrected this at the beginning of this quarter. It was only for the annualized number, 9 months number, we were at 35%, which is at 32.5%, which is a drop of about 2.5% on the gross margin.
Sorry, sir, your voice was breaking. So you said we are at 32.5%. We can expect to be in the range of 35% is what you said. Is that correct?
No, I said the same period, 9 months period of last year, we were at 35%, and currently we are at 32.5%. So I will also tell you that the period of last year was the opposite of what it is today. The input cost had seen a steep dive in actually, I can say there was a positive impact to the gross margin because the prices were very low. Actually they were seeing a downward trend. Because beginning of the quarter you price it, and then during the quarter the price continuously goes down, it settles to your gross margin, and you have seen the opposite. So it will be unfair to expect a 35, it will be also not correct to expect a lower 32. In between is what is the correct.
Okay. And just two follow-up questions on this particular part, sir. If we see our larger peer, right, even they are in the same category, but their gross margins are not affected to the extent our gross margins are affected. So would it be right to assume that the price hikes by the larger peer would have been there in the quarter in which our margins got affected?
I think it is a function of correcting the price. I think they would have taken a price increase before the third quarter, and so that impact of the material cost got nullified. And we were expecting the prices actually, because they were peaking at, we believe that it was peaking at that time and will get corrected. But actually, particularly all the metals, they are seeing continuous price hike, and so the input cost is impacted.
Okay. And this time extension to now moving from gross forward to EBITDA margin, we have seen, an increase in employee expenses in the last 2 quarters from 24 odd crores to 33 odd crores and other expenses to 40 odd crores. So if I add up both of this, probably we'll have an annual run rate of 300 to 320 crores kind of mota expenses out there, with a gross margin of 33 odd percent and a fixed and below that expense line item of 300 odd crores. I mean, what kind of EBITDA margin you guys, management is looking at? Because if I take into account a 15-20% sales growth with a 33% kind of EBITDA gross margin, and with the current expenditure run rate, the 13-14% EBITDA margin, what you have been guiding, looks like a little difficult. So am I missing out something on this particular aspect?
So if you want guidance, I would want to say that the gross margin will continue to be between upwards of 32. So to assume it at 33%, and all our costs, direct and indirect costs, whatever you assumed is also correct, which will be in the range of 20%. And so we believe that if everything is normal, the expected EBITDA should be between that 11 and 13%.
Okay. And just one more question from my side, sir. We are seeing a lot of, changes in the e-commerce platforms, the way that, kitchen appliances are getting sold, right? So, Cloudtail, been the biggest seller on Amazon, is now completely disrupted, right? Also, similarly, so this inventory-led model, which was earlier allowed which was allowed on e-commerce platforms, has now been dismantled to a larger extent, right? So how do we see that kind of, affecting our sales, or had that kind of affected our sales in the quarter that has gone by, right? Till the time we kind of tie up with other bigger vendors on these platforms, if you could help understand a little bit on that front.
Just 1 second. I think people are complaining about our line not being clear.
Members of the management?
Clear now?
So please say, I'll just reconnect you all once again. Just give me a minute. Ladies and gentlemen, the line for the management is reconnected. Thank you, and over to you, sir.
Yeah, your question was on e-commerce. I think you dwelled into that situation very well. There has been a little change in the way, particularly these large sellers on the e-commerce platforms have evolved or correcting. So they have moved from what you mentioned, Cloudtail, to other sellers. There was a little impact in the quarter, more particularly also to do with this transition. Now the new sellers are already in place, and so the business is back as normal. It's nothing to do with large sellers. So it is only a replacement of one company with another company. Hello? Hello?
Hello? Hello, can you hear me?
Yeah, I can hear. Am I audible to everybody?
Yeah. This is much better, sir, much earlier than what it was previously, actually.
Yeah, so on the e-commerce thing, it is only there was a transition during this period that the existing company, particularly you have mentioned about Cloudtail and some companies like this, have been replaced by other companies. So, of course, when the transition, during the period of transition, there was a little disruption, but I think that is already normalized now.
Okay. Thank you, sir. I'll get back in the queue for other questions.
Thank you. A reminder to the participants to please limit your questions to 2 per participant. For any follow-up, may be requested to rejoin the queue. The next question is from the line of Himanshu Nair from Yes Securities. Please go ahead.
Hi, good morning, sir, and thanks for taking my question. So firstly, sir, just to understand in terms of the current quarter's performance, I mean, is there any specific geography you would want to point out where you faced a bigger decline on volumes, especially the South market, or was this slowdown broadly equal across our regions?
No, actually, see, we track our channels, and so particularly if we want to track regions, it is more to do with modern retail, general trade, but e-commerce is neutral actually. All the shortfall in the revenue, a very large chunk, it is closer to 26% of that revenue, 26 crores, which the shortfall was only in the e-com. There are multiple reasons for that. One was that the pipeline for this category was choked. they had sufficient stock, not particularly to our brand, but in general. And so there was a little, embargo or limited buying. And as we already explained to you, there was a transition from existing large sellers to other sellers. So that was another reason why they had slowed down their purchase. And now again it is back to normal. So region-wise, there is absolutely no problem because our general trade has been growing. Our modern retail, has, of course, has been very, very large. I can say handsome growth. If we want to know the number that we have grown on the modern retail business, it is in this quarter we have grown by 70%. So of course, it may not be exactly comparable to the last year because last year maybe we were selling more on e-commerce and there was an impact of COVID at that time. We did have an impact of COVID this time, but compared to the last year period, I think this period was better. So the modern retail was all open.
Okay, got it, sir. So second question, slightly longer term growth outlook. So what we are seeing is maybe in this inflationary environment, the players who are focused on the more premium products are maybe not getting impacted because maybe their target market doesn't really get impacted that much by this inflation. But given that we focus on the economy products mainly, what are your comments or what are your views on the price elasticity? For example, if this inflation were to continue, for some more time and maybe even increase, and we are forced to take more price hikes, do you think demand structurally can get impacted with our in our target segment?
We believe that inflationary input costs going up is uniform for everybody, and then of course affordability and cost increase are factors to be considered. But when all the players in that segment will have this impact, and if there is an increase in overall cost of that particular product, I don't think it really impacts overall sales. Because if we were, as a brand and the segment that we operate, if we were the only people to have a price increase, then it could probably assume that it will impact business. But if this is across the brands and for the whole category, I don't think it should really impact. I think it is more of being prudent to ensure that the costs are rightly assumed and passed on. So I think we are working on that, and so we should be back to our normal gross margin.
Okay. So no, sir, my point mainly was to understand, given that we are already at a lower gross margin than competition, so what I was thinking was maybe the other guys have some room to absorb some amount of material inflation. But in our case, I think we have limited flexibility on that front. So from that perspective is what I was asking you.
So comparing with anybody else, I don't think I have an answer for that. But on our business, the way we work, we operate, we believe that we are comfortable at the gross margins that we aspire to have. And as discussed earlier, we would want to be upwards of 32, but ideally safe to assume at 33%. And we want to ensure that all our costs are covered at 20%. And then if there is no abnormality in between during the quarter, then we'll end up with the aspired EBITDA margin.
And on the growth front, your guidance would remain, or your aspiration would remain to keep growing at this 20-25% despite the recent slowdown that you've seen?
So again, I would want to say for the 9-month period, we have grown upwards of the number that we are discussing. And also for the current quarter, we are seeing business as normal as per the business plan. So we believe that we can continue to grow at that growth rate.
Understood. Got it, sir. Thank you. And all the best to you and the team. Thanks.
Thank you.
Thank you. The next question is from the line of Deepak Katwani from Girik Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just had a question on the tax rate. Tax rate again is low this quarter, which is supposed to be normalizing going forward. So could you put some color to it as to what happened this quarter?
So we had assumed a higher profit for this year, assuming the normal profits for this quarter. And so you go by that 45% for the first half. And so we had already covered, we had already provided for that tax. So, that is got normalized now.
So what is
we may not
the effective tax rate for the year?
That we had earlier assumed.
Sorry?
We had assumed a higher profit number for the year.
Right.
And we had provided for tax at that rate for the first half. Since the profit number is not in line with that annualized number, we have again, so if you want to understand, I'll tell you, we had assumed that 125 crore profit PBT, and then we have corrected it to 89 crore. So that is the number. So that's why that for this quarter, you will see that the correction on the tax.
Okay. And what is going to be the effective tax rate for the year, if you have that number?
So we have a carry forward of 40 crore, and so almost 50% of that average rate. So assuming 25% is the rate, we'll be at 50% of that, 12-13%.
Okay. Sure. Thanks.
Thank you. The next question is from the line of Saurabh Shah from AEM Advisors. Please go ahead.
Good morning, sir. Sir, question on your employee costs. They've gone up about 40% from last quarter to the current quarter. The last quarter meaning year ago quarter to now. Just wanted to understand, sir, what's happening over there, because the volumes are not large. So is this just salary increases, or what has really happened here?
No, so it's not correct to assume that volumes are not large. I will explain to you in detail. So last year we have two kinds of employee costs: direct employment and indirect employment. All the direct employees we had at the end of December 2020 last year about 2,200 people on our rolls, which has ballooned to 3,200 people. The increase in number of people is both to the volume growth and also additional plants that have been installed for backward integration of our facilities. There are every quarter we have been increasing production capacity, and also both some products which we are earlier either importing or sourcing. So likewise on the indirect cost, I can say we had 924 people, which is now 1,032. So there is an increase in the number of indirect also. So during the Corona time, during that period, of course, we'll also rationalize some people. So all that, both for the growth by volume, by also the ensuring that new lines are well capitalized by human resources. So I can say in the total from 3,200 people, we are a 4,200 people family today. So the number of people have also grown. Of course, there is a normal increment that we provide to our employees. Both put together is what is contributing to that increased employee cost. But when you will see the revenue growth and will want to then compare it to percentage, then it will be normal.
So, for a question on the margins, I heard earlier that you're looking at what we should consider is about 12% EBITDA margin. So, just mentioned with the backward integration and all those efforts, shouldn't margins be increasing, or you don't expect this to increase in the near term, say in the next year or so, once the full effects of backward integration are done?
New plants also take some time to stabilize. But as a policy, while we want to slowly increase on the gross margin, but it's not dramatic. As a policy of the company, we want to protect our EBITDA margin, maybe a little more than the 12%, but all the benefits that we accrue, we would want to pass it on. We would want to look at higher growth rates than higher margin, but still we would want to protect our margin and also protect our position. So we continuously invest on backward integration to be more relevant to the consumer PG that we are addressing.
Yeah. So there's a question also, is backward integration more for preserving quality, or you think it should be, adding to the margin as well?
Three is a supply chain, quality, and to control cost.
Okay. So the last question was on the two new business lines, the modular kitchens and the electric switches, how do you see those businesses scaling the next maybe 2 or 3 years? And what kind of margins do you see in the business as you build more scale?
Because they fall under the Pigeon brand, for us it is product agnostic. The margins will be similar, but for the initial period when we establish. But since we know all the kitchen business already, and the switch business is an extension of the LED bulb business, so we believe that both these will contribute well.
But margins should be in the same kind of region, you think, in the
same range.
Scale? Because just now I'm assuming they're quite small, so they will be a bit dilutive to margins. Okay, sir. I had something, but I'll come back. Thank you.
Thank you. The next question is from the line of Binoy Jariwala from Sunidhi Securities. Please go ahead.
Yes, hi. Thank you for the opportunity. We are seeing decline in the volumes, and we've seen some decline in the our net sales realization per unit as well. Can you just explain me what drives the decline in the net sales realization? There's quite a sharp decline on a sequential basis.
Honestly, I don't understand this. Where do you get this data from decline on?
So this is the sales divided by the volume data that you share. That has declined quite sharply on a sequential basis. So in Q2 FY22, the average.
Any particular item that you observed this? Any particular category?
Pressure cooker has declined from roughly about 850 to 666. Yeah. That's the main, I think that's the main which is dragging the entire decline.
You will not know how many combis we have sold versus how many single units we have sold. So the sales divided by the volume is not a comparison.
Okay.
Otherwise, there is no price decrease in any of our categories because there is an inflation in the cost itself. So there is no price decrease in any of our categories.
Okay.
Unless we have replaced with some categories like kettle or choppers, which we have replaced imports versus our domestic production, where we have had substantial cost benefit which we have passed on. But for products which we are already producing domestically, there is no downward cost trend.
Understood. Okay. Second question is on the GT channel. Could you help me with the growth in GT channel for Q3 FY22?
It's about 10%.
Okay. Thanks. That's it from my side.
Thank you. The next question is from the line of Aman Batra from Goldman Sachs. Please go ahead.
Yeah. Hi. So just wanted to understand the A&P spend, how that has changed over the last couple of quarters.
No, we continue to spend about 3%, and it is based on the revenue. And currently, also we are in the same trend.
Okay, so there is no reduction in the A&P spend.
YTD, we are at 24 crores, and for the quarter it was 9 crores. So YTD is at 2.8, and for the quarter it is at 3.1. So there is a small operation, very small. So on an average, we would want to spend 3% on the A&P.
Got it. And just on the discounts which operate on the websites, Amazon and Flipkart, etc. This is optical discount, I would say, compared to the MRP. Is that controlled by Amazon and Flipkart, or do you have any say? Because when you have sold it to their arms, so it goes away and the pricing is determined by them.
So we work on a system called MRC for the company, the minimum realization cost for each product, and we will always invoice them at this price. And today, statutorily, they cannot sell it below their cost. Of course, the price is controlled by them, but we will not allow them to discount below. We will want to always manage the various channels. So the channel conflict is what our product has managed. And to keep that stable across the channels, they will ensure that we'll ensure that none of these people go below those desired minimum value of sale. But for the company, it is actually the guiding number is the MRP.
Got it. Understand. And just on the margins, you earlier commented that gross margins will go back to 34. There seems to be a tone down of expectation. Earlier 35% gross margins and 14-15% EBITDA margin used to be the guidance. So this 12.5% EBITDA margin which you are guiding for currently is for the near term, or is it kind of sustained for medium term as well?
Inflationary trend, it's better to assume that will be on the lower end of the margin. So between the range that we expect, so I believe that it will be upwards of 12% for the annualized. And for the near term, I think if the same inflationary trend continues, we should continue to expect in that range. Obviously, because all that price correction does not get 100% passed down. Whenever there is a declinary trend in the input cost, the margin will definitely again shoot up. But currently, we are witnessing inflationary trend in the input cost.
Got it. And lastly, on the channel financing piece, where are we on channel financing now? How much coverage we have done?
More and more of our consumers are coming on channel financing, but there has been a shift in the e-commerce platform. Currently, because there is a change from the existing buyers to a new company, currently we are funding. Normally, otherwise they will organize for channel financing, and so at the moment it is funded with our resources. But that will again come back to normal. So I can say upwards of 70% of our revenues are on channel financing, and there would be a little change during this quarter only, last quarter, because there was movement from the existing companies that were buying to other new entities, and that will again get stabilized. It is only a question of a little time.
Got it. Okay. Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello. Thank you very much, sir, for the opportunity. Sir, I just wanted to understand the range that you mentioned, 11 to 13% EBITDA margin. So that is from fourth quarter onwards, right? Because that's when you said that it has come back to your normal kind of a growth, right?
So currently we are at what is it? Yeah, this is for the for the quarter. From the quarter you can be safely assume that we will be back to that. But currently we are YTD at 10%. There will be an improvement for the year with the correction in the fourth quarter.
And even on the margin front, 11 to 13% is what we are expecting in the fourth quarter as well, which you mentioned.
No, that's what I mentioned. See, YTD we are at 10% on EBITDA, and for the quarter there is a slip, and with the improvement in the fourth quarter, we definitely expect the the margin to be upwards of that 10%. But for the near term, we can say that we are again getting back to that between that 11 to 13%. 12% is safe to assume.
Understood. That's quite helpful. All the very best. Thank you.
Thank you. The next question is from the line of Ronak Vora from Home Advisors. Please go ahead.
Hi, sir. So I want to ask, so exactly we couldn't hear what happened with the employee cost. If you can just help me out.
Okay. So there was an increase of about 1,000 employees in the direct employment. So we have added new lines and increased capacities on our existing lines, apart from the backward integration, the package that have come up. And there also was a rationalization during the previous year where we had limited our number of employees. With the growth currently that we are witnessing and the planned growth, there is an increase in number of employee count. Overall, what we used to be at 3,100 number for the company is currently at 4,200. So there is an increase in the employee cost, but when you compare it with in terms of percentage, we are very much in line with the to the revenue. The employee cost remains the same.
Okay. And secondly, sir,
correct to compare it quarter to quarter. Annualize what is the number you should see. because the cost remains constant more or less throughout each of the quarters, and the revenue number moves. up and down by 10%.
Okay. And secondly, in the gas cooktops and non-stickware segment, so we witnessed for the 9 months single-digit volume growth number. So what would be the reason for that?
So previously we were also selling, the last year we were also selling cooktops in the oil company business. That is lower end of the cooktop, and we have come over the last 5 years, from the year 2014, we have continuously, as a strategy and policy, continuously reduced the sale from this channel, and the current year we have brought it down to 0. So though we are growing, it is also netting off the business that was let gone. So last year we had a 20 crore revenue from the channel which we have let gone and brought it to 0.
Okay, sir. Thank you.
Thank you. The next question is from the line of Romil Jain from Electrum. Please go ahead.
Yeah, hello, sir. So just want to understand, the gross margin contraction that we saw, YOY. Was there any, apart from the increase in the raw material, was there any impact on the product mix that we usually have? And also the price hike that we took, did it compensate for the entire raw material, or we see more hikes coming in?
So the function is only to do with more with the input cost and more to do. There is a very steep price increase in the input cost. Very, very steep price increase. There are two factors. Right. One is the domestic buying, that we buy all these metals and plastic, which has seen a steep increase during the year. And also there is abnormal freight cost increase. To give you an idea, I'll tell you, our average cost of one container from the factory in China to our factory used to be about 1,06,000 rupees, which has ballooned to 6 lakhs. So the increase is not, it has been abnormal. And to ensure that supply chain does not get affected, we had given a free hand, because the availability of containers was also a challenge. So we have a very good freight forwarder, and we had given him a free hand to be with the end, whatever is the current trend and the market price, to pick up the containers. So there has been a steep price increase in the input, and that is what has affected the gross margin. On the container cost front, I can say it is slowly coming back to normal, but there is a continuous increase in the input cost of particularly metals like aluminum and steel.
Okay, so now are we seeing the pressure, coming down, or how is the situation on the raw materials right now?
So raw material, there are multiple raw materials. Some materials are stabilizing, and the freight costs are. We are not coming back to the original, but it is a downward trend. But aluminum input, which is a major input in our various manufactured products, that is seeing a continuous to go up. The price is going, the costs are going up. So we have corrected the price for this quarter. So if I say that we'll be back to that extremely good times when we had gross margin at 35%, I don't see there, but we are definitely looking upwards of that 32, 33. So that is where we are looking, seeing this quarter.
Okay, and the second question is on the competition side. So just want to understand, obviously we were waiting for the raw material to fall, and it didn't fall, so we did not pass on the price hike. But is the competitive scenario also very high, which is also avoiding not letting us increase the price, just on the competition piece?
So fortunately at Stovekraft, we are a very confident company, and we believe in what the internal think tank thinks, and with each of these product head has given that freedom to think, and we only go by this, that what we assume, and I think it was not correct to assume that the price will stabilize. That is only, I don't think otherwise. We are having volume and growth in channels both, but for the e-commerce, even these circumstances growth. So demand side is not an issue for us. At the moment, we are not experiencing any demand. Even now, current times after the quarter also, we are seeing normal demand. So that is not affecting our decision on price increase. This was based on the trend that we had foreseen. We thought that the price has peaked, price increase has peaked, but what we have experienced is not this.
Okay, and the feedback from the dealer distributor, regarding the product quality, any complaints, warranty, all those things, any sense you can give us on that?
No, we continuously improve on our product offering. So I don't think there is anything to worry about on the product quality or the consumer expectation from our brand. We are actually improving every day. Our customer service, we are strengthening it every day. So I don't see any such issues in that front.
Okay, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Devesh from DS Investments. Please go ahead.
Yeah, hi. Good morning. Just wanted to get your comment about 2-year CAGR, right? Because last year the base quarter had a lot of favorable condition, and this year it's working other way. But if you were to take a 2-year point of view, how do you see our performance?
We are growing upwards of 20%.
Okay, so that's as per your aspiration, what you called out, and you think volume-wise and value-wise combinedly, it's delivering where you want to be. Is that how it is?
I think interlinked, both volume and value, because unless there is a declinatory trend on the input cost, value and volume are correlated. For us, actually, it's a volume growth which derives the value growth. And so, with both the channels getting stronger and our product offerings getting stronger, I think to safely assume this aspired growth, I don't see any challenges. At the moment, we are not experiencing any kind of resistance or challenges.
Got it. And another thing on competitive landscape, I believe you answered to previous participant. I just wanted a different flavor here. Now, if we were to look at all industry peers, the similar issues have been faced by everybody. And we have already announced our intention to sort of have 25% or 20% of our revenue coming from new entries that we have announced, right? I just wanted to get your feel that the core focus areas which we have currently, do you see a issue of a medium-term competitive landscape that is triggering us to sort of look at other optionalities? Just wanted to get a medium-term plus view from your point of view.
We are not seeing any kind of resistance or tapering on the demand. Actually, they are very robust, I can say. Like we explained to you, there were operations in the e-commerce channel. There are also challenges in the export channel. But in terms of orders from the export, we have a very strong pipeline of the orders. And with what we are seeing on the logistics, I think this is getting normalized. And also from our customers, they want to buy more than what they ordered. That is the situation we are seeing. So I think on the product offering and the categories that we are there, each of these categories, we are seeing very good growth.
Got it. All right. Thank you for your input. Thanks.
Thank you. The next question is from the line of Rusmik Oza from Kotak Securities. Please go ahead.
Thanks for the opportunity. So, question on the employees, and the cost. So, if I analyze this year's revenue, we'll be at around 1,200 crores of revenue. And if you remove the 30% e-commerce contribution, then we are at around 850 crores of non-e-commerce revenue. Do we need 4,000 employees for this kind of revenue? This is one first question. Second is, if you can just give us a breakup of this 4,000 employees, how much are on the manufacturing side, how much are on the office side, and how much are on the sales side. And third related question is, does this high fixed cost eat away, or negate the entire impact of a backward integration? Because the purpose of backward integration is to improve EBITDA margins. But if these kind of fixed costs eat into all these efforts, then we are at a situation where we are at a EBITDA margin which is a little subpar than the peers in the industry. Your comments on this could be helpful, sir. Thanks.
Yeah. So on the direct and indirect number, I would want to say that currently of the 4,200, 3,200 are on the direct employee role. That is attributing to manufacturing. And indirectly, we have about 1,032. So these are not comparable numbers to peer group because we are a manufacturing company. Today, we are closer to 90% of our revenues come from products that are manufactured within the factories of Stovekraft and highly backward integrated. On the margin from margin improvement from backward integration, our objective is to ensure that we are relevant to our target customer. And so, majority of the benefits that accrue, whether by optimizing on various cost including backward integration, we pass it on to be relevant to the TG. So our aspired margin is in the range of what we have been discussing. It is not that we are with backward integration, our aspiration is to increase our margin, but it's to be more relevant to the TG, and we will focus on a higher growth rate than only increasing the margin. There could be small improvement, but it's not that 100% of the benefit that accrues goes to the gross margin. It will go to the consumer.
Thanks, sir.
Thank you. The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead. Mr. Lakhani, we are unable to hear you. Please speak closer to the answer.
Is this better? Hello? Hello, is this better?
Sir, your audio is coming too low, sir.
One second.
Hello?
Hello, is this better?
Yes.
Yeah,
Yeah. So my first question is on the e-commerce. I wanted to understand, you mentioned the number as 26 crores. So we didn't have a 26 crore sale this quarter, and that is on account of the Cloudtail. Could you explain that bit? So is it that Cloudtail is in the process of shutting down and hence they did not reorder from us? Is that the reason why we didn't have that 26 crore sales?
There are two reasons. One thing is overall this e-commerce channels had clogged for the category. There was a what you call jam, I can say, that or in anticipation of better sales, stocked up their warehouses, which for the category, since it was jammed, there was kind of embargo on the fresh buying. But also is not the cloud. Of course, the entity Cloudtail is shutting down, but that have been replaced by multiple entities. And in our category, so there is a new entity already in place. So there was a transition period which has also affected the sales in that quarter. But that will all get corrected. So finally, the minimum stock that they require to maintain, they'll continue to do that. So that will get corrected. Yes, what I mentioned was last year Q3 versus this year's Q3 for e-commerce sales, we were at 104 crores, which is 77 crores this Q3. So for that period, so there was a drop of 26% or 26 crores, more or less is the same.
So seems like we lost the connection for the current participant. We move to the next question from the line of Kalpit Narvekar from Alliance Global Investors. Please go ahead.
Hello, sir. Thanks for taking my question. Sorry, I joined the call a bit late, so this might be asked earlier. But if you could share some color in terms of the volume declines that you saw in the rural versus the urban, say on the general trade channel.
The general trade has actually grown by 10%. We have not seen a decline in this Q3. Of course, year to date also we are very robust, but specifically for Q3, compared to last year, general trade has grown by 10%. There has been no volume decline.
So let's say not just on the general trade, but on an overall company basis, if you have data on, say, rural versus urban, where the demand comes from, do you have any color on how much was the decline or the growth for rural versus urban? Was there any major divergence?
Well, we'll not have exact data like that, but I don't think there is any change in the contribution from rural urban. There has been actually, of course, we are addressing investor fraternity which has witnessed the same number on the revenue, but actually we have grown. There are two particular segments where we had challenges. One is in the e-commerce, which is well explained, and on the exports is because to do with more the logistics. It's not to do with demand. And otherwise, we have been growing even in the quarter, both in volume terms and value terms. There is a decline in gross margins. This is due to the input cost. There is an increase in employee cost is to do with the growth in the overall business, the size of business. Otherwise, business is as normal.
Okay, sir. So if I'm looking at the slide number 7 on your presentation, right? So these gas cooktops and non-stick cookware and small appliances have seen 30% declines on a YOY basis. I actually don't know how much that is on a QOQ basis, but have you seen any declines on a quarter-on-quarter basis there? And why has there been a higher impact on, say, these 2-3 segments, right? Like gas.
Let me explain item-wise. Gas cooktop, we have let gone one channel, which we have been continuously doing over the years. And so actually there is a premiumization of the product that we offer today versus what we were selling in the past on the gas cooktop. We have given you on that both on the quarter and the 9-month numbers on the gas cooktop. So if you see the 9 months, there is in absolute numbers, there is a growth. Maybe in the quarter, last year quarter, the sale of the stainless steel cooktops that we were selling through this oil company channel was higher, and that's why you are seeing a overall Q3 drop in the number of units. But the overall and also the lower sales in the e-commerce. This is where the impact is there in the gas cooktop business. And on the non-stick cookware, it is more to do only with exports. Majority, I mean, almost 50% of by number of units is for the non-stick cookware. It comes from our exports, and for the Q3 particularly, there was a huge, I can say, challenge in getting the containers, and that was the only challenge in the non-stick cookware. The small appliances is a combination of all several products. By unit wise, we'll have to do it, but otherwise. Only the Q3 we have seen lower number, and again this is to contribute to the what we would be selling in the e-commerce.
Okay, sir. One last question from my side. You've mentioned that you've taken price hikes in the 4Qs. So to what tune would those price hikes be?
Around 4 to, I mean, the different categories we have a different increase. But I can say overall at a company level between 3 to 4% is what is the price increase that we have passed on to the business. And the effective date, I can say, though we started it from the beginning of this quarter, more or less from 15th of January, the new prices were effective.
Great, sir. Thank you so much. Good luck for the next quarter. Thanks.
Thank you. The next question is from the line of Siddharth Purohit from InvestQ Invest Advisors. Please go ahead.
So just one clarification. You said you lost some shipment to exports, and is it possible that they will come back during this quarter, and then any incremental order that you are expecting from export also? And if you can quantify what could be the probable revenue that we are looking in Q4, are we going to make up some losses that we saw in last quarter? If you can quantify that, that will be helpful.
I can say that currently the order book for the next 3-4 months, that will between say March, April, May, June, is upwards of 75 crores, which normally is our annualized number in the previous times. So for this, the period between the fourth quarter and the first quarter, the expected revenue from our export is in that range. We will be able to, of course, we have the capability to execute the whole order. And also the situation on the container front is not absolutely normal, but it is getting streamlined.
Okay. And sir, given that we had some disruption in the Q3, so are we expecting some sort of aggressive sales and trying to make it up in the Q4. So could you quantify, what's the internal set of target that, we are looking at in terms of top line?
No. So again, I want to repeat, the top line for us is driven by the channels, various channels. And we are seeing, other than these two, the challenges that we had with the export and with the e-commerce. E-commerce getting normal with the new entities also in place and the channel, the block that has been over. So with both this, e-commerce is back to normal. And on the export, once the container thing stabilized, actually, there is, I can tell you, a very robust demand. There is a lot of these our consumers want to look at India from where from the current country of buying. So there is, on the demand side, there is a good demand. There were challenges. I think once this freight thing, the container thing gets stabilized. Also, I tell you, for them the input freight cost, because we are a bulk, the product is bulky. The freight cost, what used to be for them, has gone up by 5-6 times, which has impacted the cost of the product also, which is getting stabilized. So I don't think there is any aberration on any kind of demand from any of these channels. So for us, the growth numbers remain, and we are very positive on that, on our business.
Okay, sir. Good. Thank you.
Thank you. The next question is from the line of Binay Jariwala from Sunidhi Securities. Please go ahead.
Yes, thank you for the follow-up opportunity. Could you help me with what is the current exposure to FRL as on 31st of December 2021?
Yeah, so we have provided for majority of that. One of the reasons for the decline in the margin will also be that. We have some more, with the end of this quarter, so the fourth quarter, all of that will be provided for.
So in the fourth quarter, provision would be approximately 3 crores, 2.5, 3 crores more?
About 2.5 crores.
Understood. Okay. Sir, could you just confirm, you said e-com sales in Q3 FY22 was about 77 crores versus 103 crores in Q3 of FY21, right?
Correct. 104
Okay.
versus 74.
Understood. And sir, what would be the volume decline in e-com channel?
So there is a contribution of several, all the categories. Offhand, I don't have this number exactly. Individual product wise, but otherwise in value terms is the exact decline.
Sorry, in value terms you said?
Value terms is
that number you just mentioned, 104 and 77.
Right. Yeah. Okay. For the on the commodity inflation, what is the total inflation in your key input commodities like aluminum, steel, stainless steel, and plastic?
Plastic
on a YOY basis?
It is peaked and it is getting back to normal, not at the original level or the COVID level. During the COVID times, the first COVID phase, all these metals and plastic had actually seen a very steep decline. Post the COVID, they have continuously they're increasing all these costs. The plastic, both the demand and the price have, supply and the price have got stabilized. There is also, I'll tell you, glass, which had seen a very huge surge in the cost input, cost of this glass, and also the supply was highly affected. So these two are getting stabilized, and also both on the supply side and the price. But aluminium continues to see increase in cost, and aluminium is a major one of the major metals that we buy. Steel, both stainless steel and steel, have stabilized at the price. There was a steep increase in both stainless steel and steel, but they have stabilized at that. It is not that it is further going up. But aluminium, we are seeing further increase I can say every month we are seeing price increase.
Fair enough. So what would be what would be the inflation or price increase broadly for these commodities in Q3 FY22 versus Q3 of FY21?
For FY20, the end is very, very abnormal, I can say. Aluminium, I'll give you in dollar terms, from $2,000 to $3,000 LME. Currently, it is trending towards $3,200. That is a kind of increase, about 50-55% cost increase in the aluminum. Even the conversion cost had gone up. So I can say safely it was close to 60%. On steel, what Q3 was at about, I will talk about steel, not stainless steel. Steel, we also consume a lot of steel. But again, similar 50% price increase was there in steel. Plastics has also seen between 40 and 50%. Glass has seen about 30 to 35%. Paper, which goes into the packaging of our products, has seen closer to 35% increase over the last previous year to this year. If it is the same period, more or less the same, because until the second quarter, the prices were normal. After the third quarter, the prices started seeing a price increase.
Fair enough. So, sir, with this, the 3 to 4% price increase that you've taken in mid of Jan, and cumulative price increase in the earlier quarters that you've taken, which is to the tune of 8 to 10%, would you still be able to touch your 30 to 33% gross margins? You need another round of price increase, right?
The price increase, we are in line at that between the 32 and 33 years.
Sorry?
With the current price increase, we are at that 32, 33%.
Okay. Okay. Thank you so much.
Thank you. The next question is from the line of Romil Jain from Electrum. Please go ahead.
Sir, just a follow-up, on the export side, I just want to check whether the gross margins would be at similar, company level margins, or they would be different.
Sorry? Export margins. Export margins at EBITDA will remain same, but at gross margin it will be lower.
Sir, I could not hear. Can you please repeat?
Export margins at EBITDA level will be the same for the company, but at gross margin level it will be lower.
Okay. And maybe lower by how much?
To the extent of the operating cost other than the manufacturing. So we have about 12 to 14% on operating cost. So it will be lower by 12 to 14%.
Okay. And just one more thing on the the cost structure. Are we doing any project or some bit of cost restructuring or somewhere where we can add to our the efficiency and maybe kind of help the margins increase? Maybe it's slightly medium to longer term. But what are we doing on that?
So improvement on various aspects of our business. We continuously keep engaging with the Big Four and various projects. It's not only limiting to increase in margins, it's about efficiency. We're improving the quality of our overall operations. So these are continuous affair, and it's not that we attempt to do everything at one go, and these are continuous affair. We keep engaging with them on various projects. There will also, of course, but then the objective of the company is very clear. We want to be very relevant to the TG. So to expect a very high growth in gross margins or at the EBITDA will not be the right expectation. I can say that we would want to protect our current gross margins and EBITDA margins. There has been aberration in the current quarter, but we'll get back to the normal gross margins and EBITDA margins. So we continuously work on protecting this, and we want to be more relevant to CG, and with that, we also can definitely expect higher growth rates than the industry.
Okay. So can we assume that, any incremental, apart from the range that you mentioned on the margins, any incremental benefit that we derive will be reinvested in the business for growth?
Yeah. Incremental benefit will pass on, yeah.
Okay, sir. Thanks.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Gandhi for his closing comments. Over to you, sir.
We thank each one of you for patiently having heard us, and I hope that we are able to answer all your queries. But in case you have any questions, you can, because of time constraints, this call was immediately truncated. So if you have any questions, you please reach out to our investor relationship team. They will be, the company will be more than happy to answer any of your questions. And I understand most of the questions you're revolving around there would have been expectations, and maybe on the particularly the gross margin numbers, there was a slide on that. But I can only assure you, we have a very strong team here at Stockcraft, very committed, and we'll be back on our regular guidance. Thank you again.
Thank you. Ladies and gentlemen, on behalf of Kraft Ltd, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.